Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And today's video is about two growth stocks which I'm buying right now. Yeah, so let's get started. Now, you must be asking me a question that Abhi, in your previous videos, you have mentioned many times that in such economic times, we must be investing into much more stable businesses who are generating positive cash flow, who are more, let's say, having a hedge against inflation and so on and so on. When we are so much uncertain about the economy, with the rising inflation rates, with the fear of recession, with the war going on, with the rise in the commodity prices and so on, then why you are investing into growth stocks? First of all, guys, I also mentioned that I'm not a full 100% value investor. A big chunk of my monthly income, yes, it's going into value stocks and dividend stocks, and I'm up by 14-15% on my dividend portfolio. That means I'm beating the S&P 500, in fact many other indices, so I'm good on that. But also I'm a growth investor, yeah. And full disclaimer, on my growth portfolio, I'm down by 50-60%, so that is what it is. But secondly, guys, growth businesses not always means that they are not generating any positive cash flow. In fact, both of these companies, one for sure we can see purely from the financials that it is already profitable, highly profitable business, and the other one is on the path to profitability, though we can see, if we remove some factors, that it is generating positive cash flow, but due to those factors it is still not considered a profitable business, but it's on the way to be profitable. Yes, it just simply means that their top line growth is growing at a massive rate, at more than 40, 50, or even more than 100% as compared to much more stable and value businesses. Plus, they are trading at a much higher multiple. So they tend to trade at a much higher multiple because you are putting in the future growth into the present value. So that's what growth business actually means. Yes, I do understand and I do agree that there are many growth businesses out there who are not generating any positive cash flow, but in this video, I am not discussing those businesses. So with that being said, let's just jump on to our first growth stock, which is none other than Tesla. Yes, and this is based on my priority. So Tesla is my first priority when it comes to my growth portfolio. So why Tesla? First of all, let's talk about the financials, and I will not dig deeper into any of these companies because that would make the video too long. So why Tesla? Well, the first and the most basic reason is their growth, and that's why it's my first priority in the growth stock portfolio. So if you just have a quick look at their financials, their earning per share grew by 250%. Guys, for a company which is 11 years old and still growing at this massive rate, simply amazing, just mind-blowing. And their GAAP gross margin was around 20.1%. Their net margin was around 18%, and their operating margin was around 19%. And to be honest, guys, their operating margin is actually at par with other big businesses, other big automobile manufacturers. And in fact, if we just check this, if you just look at this, guys, gross profit at Tesla's core automotive business is 30.6% of revenue, a figure that has increased from 24.1% a year ago, which beats many old guard automakers by a mile. For example, General Motors and Ford Motors respectively had gross margins of 14.2% and just 12% in the recent quarters. So this is what tells me that yes, Tesla is having a big chunk of the market share. Why? Because of such margins. If you have seen my channel before, margins are one of the most important things which makes a business amazing, which makes the business more profitable. And Tesla's margins, guys, are super amazing. And their balance sheet, guys, it's super amazing. I mean, if you see their balance sheet from 5 years ago, it's totally upside down. Their debt to equity ratio was huge. I mean, nobody would have ever imagined Tesla in next 5 to 6 years would just turn upside down their full balance sheet, and they will have good amount of assets compared to their liabilities. I think now they are left with only $2 to $3 billion of liabilities, so they are literally coming to zero. This would be amazing, guys. So this is another reason. Their cash flow is of course a bit lower as compared to the previous quarters, but we can see this trend. So here we are on the cash flow statement of Tesla. So we can see that quarter 4 of 2019 was $1.4 billion. So their quarter 4 is usually the strongest quarter, and we can see this from the history of Tesla. So we can see that quarter 4 here was big, then here quarter 4 was big compared to quarter 3 and quarter 1, then their quarter 4 in 2021 was again big compared to quarter 3 and quarter 1, and so on and so on. So but what we can see right now is that their cash flow is improving with a huge margin. With compared to 2019, their cash flow is now at $2 billion. They are sitting at $2 billion positive cash flow. And this is what really amazes me, guys. Tesla is growing at such a faster rate, and this cash flow, yes, as compared to quarter 4, like I said, it is in the history that their quarter 1 earnings, their quarter 1 cash flow is usually less than as compared to quarter 4, because quarter 4 being the strongest quarter. But I still think that this quarter 1 2022 for Tesla would have been much better than previous quarter 1 quarters from the previous years, if these macroeconomics would not have played a role. But anyways, so their cash flow is pretty amazing, and also their quarterly guidance was 60% year over year in the quarter 1 report. Yeah, and their energy storage model has been increasing by 90% year over year, and they do believe that in 2024 their FSD beta testing will get completed. I don't know how true that would be. I mean, there have been many promises made by Elon Musk in the past. Some of them has been implemented successfully, some not, but it always surprises. Tesla always surprises us in a positive way. So let's see, let's wait and watch. And they also claim that their volume production for the robotaxi should begin in 2024. Like I said, that we don't know when these plans will be actually implemented. But again, guys, these are huge growth avenues for Tesla, and Tesla is actually widening its moat, and this is going to be a huge business in coming 10 to 20 years. So Tesla is going to be there for decades to come. So I am really bullish on Tesla for now. And again, one more important negative thing in the short term period would be their quarter 2 earnings report. I do think that their quarter 2 would be suffering a bit because of the Shanghai lockdown, and their production was not as they planned. But anyways, they are coming back with a bang. So this is just, in my opinion, a short period hiccup. So guys, these were some of the very few important points out of the many other important points which I can dig deeper into. But this is not a Tesla video, and that would make this video quite long. But if you guys want me to cover Tesla in depth as an individual stock, then please leave a comment in the comment section down below. Now guys, apart from this, let's talk about the valuation, because if somebody would have told me 5 years ago that Tesla is undervalued, I would have disagreed with them. Now, many other Tesla bulls out there who have been investing since 5 years or even 10 years in Tesla would disagree with me. I'm here just to give my personal opinion, okay? So bear with me, please, okay? So even 3 years ago, if somebody would have told me that Tesla is undervalued, I would still disagree with them. Why? I would get onto that in a moment. So basically, a value investor would always check the free cash flow. You can, of course, calculate the valuation of the business based on the earnings, book value, revenue, but those can be in a way manipulated. But cash flow cannot be. So cash flow is the holy grail to calculate a proper valuation of the business. Now, if we look into the discounted cash flow model of Tesla, of course, we would see that Tesla is a bit overvalued. But let's look into Tesla in another way. Yeah. So let's see the operating cash flow metric of Tesla based on the history. Okay. So if we go all the way back to 2016, we can see that Tesla was actually trading at a price to operating cash flow of 800 to 903. The peak was around 1000. Yeah. So that's one of the reasons why I would disagree with them 5 years ago if they would have told me that Tesla is undervalued. Now let's have a look 3 years ago, and in this moment, yeah, when it was trading at 900 to 1000 price to operating cash flow, Tesla was not even profitable. Now let's say when Tesla was actually profitable, yeah, let's say 2020. Still in 2020, it was trading at a price to operating cash flow of 63. Now, at the time of recording this video, Tesla is actually trading at a price to operating cash flow of 49. In my opinion, if we compare Tesla based on its history, and if we see the average price to operating cash flow of Tesla, which is at 72, in that way, Tesla is undervalued in my opinion. And I've been buying Tesla when it was actually at 40 price to operating cash flow, when it actually hit the 52-week low this year. So that's one of the reasons why I think, in my opinion, Tesla is actually undervalued at this moment. And also, if we look at the price to earnings growth rate of Tesla, it's just sitting at 0.5 when compared to other businesses like Alphabet, Facebook. They are actually trading, Amazon, they are actually trading at more than 1 price to earnings growth. So if we look at these small metrics, we can see that Tesla actually is undervalued right now. And apart from that, guys, like I said, the Tesla is widening its moat. It's not just limited to EV sector. Yeah, the growth avenue for this business is huge, and that's why I am buying Tesla right now at such cheap valuations compared to pre-historical prices. And I do think that if I buy Tesla and hold it for next 5 to 10 years, I have an easy 5x to 10x from here. Anyway, so let's get on to our second growth stock, which is actually quite a controversial stock, to be honest. So guys, here is the second growth stock, which is, like I said, it's a bit controversial. It's none other than Palantir. Now guys, Palantir has been in a lot of discussions because of many reasons out there. First of all, Alex Karp recently, the CEO, came out and gave an interview in CNBC, and he was all over the place, by the way. And people were saying that he is not capable to run a business like Palantir. Many people are saying that Palantir is really overvalued. They are there since 20 years and have not been generating any positive cash flow until now. They are not profitable until now. They are a service provider, and service provider don't have good margins, and they won't be able to improve their margins in the future, and blah 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 blah. Now, I'm not against anyone. I'm just here to give my personal opinion, and I do think that Palantir is a great business. And yes, I do understand that Alex Karp, and I would agree with that, that Alex Karp did not really give a good interview, which was not really liked by many retail investors. He was, yes, all over the place, and he definitely has to improve his communication skills when he's talking about his business, and when he's talking about Palantir as a business, and giving out much more valuable information out in public. And also in the earnings call, he was not so good, yeah, because there were many things which they hid from their earnings report, which was in the past actually declared, and now they actually also started hiding those slides in their presentations because the margins became less, which is not actually good, because they should not think that all the retail investors are quite stupid, and they would eventually find out what they were actually hiding and what the business is actually doing. So this is what I really didn't like. But let's talk about something. Yeah, Elon Musk also has been in the news lately, and like for example, in case of ESG, the Tesla was kicked out from the ESG index because of its misbehavior. Twitter deal, many people are against, many retail investors are against Twitter deal, and they are just saying that he's just playing with the business. His focus will be shifted towards Twitter rather than being fully concentrated on Tesla. But guys, he also has SpaceX. SpaceX is a far much more advanced business which needs much more attention than just a social platform like Twitter. Anyways, and he still managed to bring Tesla to a next level. But anyways, I'm not saying that Palantir would be the next Tesla, yeah, but sometime businesses like Tesla, Amazon also started from scratch, right? Now, yes, people would still say that Palantir has been there since 20 years. But guys, just think like this. Palantir has been there since 20 years, but still hasn't got bankrupt. Do you get that? Many businesses which started 20 years ago, yeah, they are not there anymore. Okay, so you have to think in this way, that Palantir being there since 20 years, yes, not profitable yet. In a way, it is profitable, but we will get on to that in a moment. But not actually profitable, but still there and improving their margins. Yeah, it still exists and they are improving their margins quarter by quarter. The growth has slowed down a little bit, yeah, which we'll get on to in a moment as well, but still they are improving and they are at par what they guided and what they expected. So yes, does Alex Karp make the business bad? Does Elon Musk actually make Tesla as a business look bad? And is it growing at a much slower rate because of the CEO? Yes, management affects the business, and I do trust in the management. But Tesla, Elon Musk is a guy who took Tesla from zero to some level, which is huge. Yeah. Similarly, like I said, I'm not comparing Palantir to Tesla or Amazon. Yeah, but Alex Karp, yes, maybe as an individual, he might not be as convincing as he should be as a CEO and when he talks in public, but the way he's handling the business is amazing, guys. So let's see what Palantir has been doing. Yeah, so let's first see at the Palantir's growth. So Palantir's growth, it's still at 31% revenue growth, which is still at par of their 30% guidance, and they always said that they would like to stay at a minimum of 30% year-over-year growth, which is still good, though it has declined a bit. But yes, many people would disagree with me, that they would say that Palantir is a growth business and 30% is not that good of a growth rate. Now, same guys are saying that Palantir is a mature business because it has been there since 20 years. So decide what you actually think of Palantir, as growth or mature business, okay? Anyways, so the commercial revenue went up by 136% now year over year. Now again, some people were against Palantir because they were just focusing on the government side of the business, and the government side of the business was growing like hell. Then the anti-Palantir people started saying that, come on, the government contracts will become saturated at some point, so they have to focus on the commercial side of the business as well. because government contracts do need a lot of time for verification process and all of that stuff. And now when they have shown their growth in the commercial side of the business growing at a rate of 136%, the same people are saying that, come on, the government side of the projects, the government side of the business has slowed down. Yes, it has slowed down. It is now around 16% year over year growth from the government side of the government projects. But guys, look at the commercial side. It is growing like hell. Also, if we look at the gap earnings are improving. Yes, one positive thing. Yes, but the non-gap earnings have been declining a bit, which is quite a negative thing. So I am here not to promote any stock, guys. I would show you both sides of the business, the negative and the positive thing. So yes, the gap earnings, yes, have gone good, but the non-gap earnings have declined. Yeah. Apart from that, the revenue from the commercial side, like I said, has increased, and the revenue per customer is increasing as well. So revenue per customer is a really good metric, which is increasing for Palantir. The government contracts slowed down. So the year over year growth was around 16% only compared to, I think, 30% in the previous year. So we can see right here that their total assets are sitting at $3.3 billion compared to $3.24 billion. And their total liabilities right here are sitting at just $954 million, which is a good thing. So their stockholders equity is actually increasing, which I would like to see in a business. So guys, this is what I would like you guys to understand, that Palantir is not going out of business. The balance sheet is quite strong. In fact, the stockholders equity is increasing quarter over quarter, year over year. This is what you would like to see in a business. So financially, it is a stable business. Okay. Now, if we see that the operating activities, the business is still not generating any operating positive cash flow. But if we look at the stock-based compensation, the stock-based compensation is huge, guys. It has declined a bit, but it's still huge. And this is what I would like to cover. If we look right here, yeah, we can see that Palantir is actually generating a positive free cash flow of $733 million. But due to stock-based compensation, the actual net income is still in negative. And this is what I would like to point out. This is a negative thing. But if we look into this from another way. So first of all, we have to understand what stock-based compensation actually means. So stock-based compensation simply means that the company is paying its employees in the form of stocks. Yeah. Now the company could pay its employees in the form of cash as well. So they are getting basic salaries, let's say, but in the form of perks, they are giving stocks, let's say. Yeah. Now, why is that? So Palantir is, and I actually am not against this. Yeah. Because Palantir, we can see, is putting a lot of amount of cash, which they are generating, back into the business, because they are a software company. Yeah, so they have to put a lot of money for the software development, and they are still doing this. And this is what I like. Yeah, this is a negative thing. Stock-based compensation is a negative thing because eventually they are diluting us shareholders. Yeah, because they are generating more and more stocks to give out to their employees. But why they are doing this? Because Palantir, like I said, is a software company, and instead of taking out the cash from the free cash flow and giving out to their employees, they are putting this cash back into the business. And why they cannot stop stock-based compensation? Because guys, like I said, Palantir is a huge software business, and there is literally no competition whatsoever in the field where Palantir is right now. The digital revolution 3.0, which Palantir would be working for, is huge. Yeah, and to work for their software, they need the best guys. And if you need the best people in your company, you need to sustain that. Yeah, you need to keep them. You need to hold those employees. And that's why instead of giving out the cash, they are rewarding them in the form of stocks, extra stocks. So this is why the stock-based compensation in case of Palantir is not hurting, in my opinion, me as a retail investor. Yes, I have been diluted, but I do like the business, and I do trust the Palantir's management that eventually they will stop this as soon as their research and development costs will reduce, their administrative costs will reduce, their capital expenditure will reduce, and that will reduce in the future. And I'm damn sure it will happen. And that is why I am bullish on Palantir. Now, many people would argue with me on this as well, that come on, how much time you need to invest into Palantir. People say that invest for 5 to 10 years. That's a really easy way to back down, and no one will question you in next 5 to 10 years if the stock actually exists or not, if the business actually exists or not. But guys, you have to give a growth business some time. I do understand that they have been there since 20 years, but they are not out of the business. They are growing each and every year. Yes, I do understand they are not profitable yet, but they will eventually become profitable. And we can see that from their financials that their operating loss, the net loss, is becoming less and less. And this is what is making Palantir to go on a path of profitability. And that's why, guys, I love Palantir's potential in the future. Just take Gotham as an example. Gotham is being used by military of US for communication. Yeah, just imagine which software would be trusted by the defense of a country to be used for them. So just take coronavirus as another example. Coronavirus was a big threat to the whole world, yeah, but the bigger challenge was vaccination, and Palantir's software was used for providing vaccinations. And this is what makes me believe that Palantir would be a huge success. Their softwares are amazing. Gotham, Apollo, Foundry, they are just super amazing. We have to understand how their softwares are working, and we have to understand what is the moat for Palantir. In my opinion, Palantir is a big steal at these prices, and I would be holding Palantir for next 5 to 10 years. And in my opinion, in next 5 to 10 years, we easily can have Palantir has a potential to reach 300 to 400 billion dollar valuation, and that means 15 to 20x from here. So I am quite confident with Palantir, and that's why I would be buying Palantir as my growth stock. So this is all, guys. That's it, and I hope you guys like this video, and if you did, then please hit the like button and subscribe to the channel. And if you want more of such videos, then please leave a comment in the comment section down below. That really helps me and helps the channel a lot. And if you guys want to be a part of my Patreon's family, then also the link would be in the description down below. So that's all, guys. Those are the two growth stocks which I'm buying. I'm buying more growth stocks, but for that I will make another video. So that's it. I'll see you in the next one. Until then, stay safe, stay happy, and ciao.